as to what's really going on with the power sector. Why is it that you're seeing the gains that you are, and whether or not it still makes for an investment case? We've got Rupesh T. Sankhe from Elara Capital joining in on the show to talk about exactly that. Rupesh, hi, great to have you today on ET Now. And Rupesh, it's quite intriguing as to how the volatility of the market, and then there is the power sector, which has been just so resilient and actually holding on to very good gains of late. Tell me, what are the tailwinds which are working for the power sector right now?
Good afternoon. In the last 10-15 days, we have seen very good recovery in the demand front. So peak demand is now close to 240 gigawatt, and it was gone down to almost close to 210 gigawatt in the month of Feb and March. So now the demand recovery is there. And secondly, if you look at the valuation, have corrected in the last 1.5 years. So valuation comfort was also there. So most of these companies are trading at slightly historical valuation. And announcement on the policy front, as well as a lot of issues were there in terms of land acquisition, right of way issues on the transmission side, that has seen a lot of resolution there. And the discounts financial also have seen some improvement there. So we see a very good power demand growth in FY27, largely because of the peak demand, industrial demand is picking up, as well as a strong residential and agri demand. So FY27 27 onwards, we'll see a good power demand recovery. And that is why the valuation comfort is there. And most of these companies are going for better capital allocation in terms of renewable energy addition, battery storage, pump storage, nuclear side. So capital allocation policy is very good. And they have strong operating cash flow. So definitely the next 10-15 years, we will see the power sector is a huge capex story for sure. And a few days back, Central Electricity Authority has released a generation resource advocacy report for next 10 years, 2036. So they have highlighted that double capacity has to reach to double. And that will attract close to 35 lakh crore kind of investment in the next 10 years. The similar is the investment of close to 8 lakh crore is in the transmission side. So a lot of things are happening on the positive side, and that will keep a multiple on the higher side than what we have seen historically for our utility space.
Right. But, Rupesh, just taking a leaf from what you said, that 2032, 2036 target in terms of the, capacity addition that is outlined. And, by 2032, I guess it's nearly 350 gigawatts of addition that we're talking about in 6 years. Would you say that the target is credible, or do you still sense some sort of execution gap?
If you look at the peak demand forecast, is close to 460 gigawatt by 2036, which is at 5.5% kind of a CAGR growth. So, and the kind of a demand which will come from the data center, from e-mobility, from green hydrogen, I think growth will be close to 5.5 or 6%. And at the same time, if you look at the energy requirement, will be close to 6.5% in the next 10 years. And this capacity addition is largely will come from the solar sides. And from 130 gigawatt currently to looking at close to 520 gigawatt. And already close to 350 gigawatt of solar is in the tendering and under implementation phases. And at the same time, we have seen a lot of green corridor phase is opening for 3 phase. So a lot of integration will happen. At the same time, battery storage addition is close to 80 gigawatts. So I think largely we might miss 10-15% here and there. But to meet this kind of power demand of close to 460 gigawatt, we need to have this kind of capacity available by 2036. And otherwise, we'll have to take a coal capacity from 60 to 70-75% PLF. But we are on track. And I think the kind of investment that is there, the balance sheet of the strong companies, I think they have also lined up significant capex. And I think the capex on the distribution side from state utilities, I think that gives a lot of comfort that we might reach to that kind of capacity addition.
Hi, Rupesh. And therefore, where should the largest profit pool lie? What would your bets tilt towards?
Yeah, so definitely the conventional player with a strong operating cash flows, are deploying their capital towards integration of solar cells or modules or a battery storage, pump storage, nuclear side, those companies stands to get benefit. And that is why this company might have seen 15-20% the price appreciation in the last 2 to 3 months. But I think multiple will remain in the higher levels. And because of better capital allocation, I think the value chain lies on the integration of the other energy verticals like a battery storage, nuclear. So from that perspective, I think a few companies like NTPC is better placed. Tata Power is also completely backward integrated and also vertically integrated. Those companies stands to get benefit out of this green transition.
And with regard to transmission capex, Rupesh, there's going to be a whole new opportunity sitting there as well, right? Because renewables requires a very different kind of a transmission infrastructure. How are you seeing the build out over there? Because one is to build out the plants themselves, the renewable energy plants. Second is to have a transmission capability from the place of generation to the place of utilization. Give us a sense as to how that is progressing.
See, that was the issue. Land acquisition right of way issue was the main hurdle till December. Since December onwards, we have seen a lot of right of way issue has resolved. So the successful implementation of Green Corridor Phase 1 and 2, I think Green Phase Corridor we will integrate or bring more solar parks into the national grid, like states which are very keen to participate in Green Corridor Phase 3. So largely, as you rightly pointed out, the generation solar wind is away from the load center. And to meet this kind of capacity addition in the solar, wind, hydro, I think we need to integrate this solar or renewable energy resources to the load center. And that is why a lot of HVDC lines will come up in the next 1 or 2 years. We'll see a lot of tendering happening there. And already we have identified all these renewable energy and the transmission, the resources, how to integrate that. And that is why I think government has come out with the 7.9 lakh crore of investment, which take care of connecting all these HVDC projects, which will transfer this power to a long distance and will connect to the grid. So I think transmission, even at the same time, if you look at the intrastate capex is also going up significantly. Many states are now evaluating proposal to bring private players and bring capex there. Their financials have improved quite a lot in the last 2 to 3 years. They are into capex mode. And because now they want to maximize their resources, there is RP obligation for the distribution companies. HPO obligations are there. And to meet this obligation, they need to bring these resources to the grid. And that requires massive transmission investment also. So I think transmission will happen significantly in the next 7 to 8 years.
I want to definitely get in, Rupesh, the West Asia angle as well at a time where both crude as well as LNG prices are moving higher. How does the geopolitical shock sort of, change the power sector investment thesis, if at all?
Yeah, definitely. We have massive coal reserves. We have massive renewable energy resources like hydro potential, wind potential, solar. Now battery cost has come down significantly. So that way, I think, and battery cost has also come down. Discoms are now very keen to sign solar plus 4, 6 are kind of a battery storage. I think and that is the main focus that we have seen a lot of thrust on the nuclear energy source. Now stage 2 has reached to the criticality. Maybe 10-15 years down the line, we'll see a stage 3, a thorium-based nuclear reactor will also come into picture. Meanwhile, we'll see a lot of Bharat small reactor or small modular reactor will come into picture. So that way, I think India is moving toward the self-reliant kind of energy transition. Few years, I think there could be some benefit for the coal-based power plant because of mismatch in terms of delays in capacity addition on the renewable energy side. But I think from longer term perspective, we are targeting all the technologies and the resource so that we will have a complete own ecosystem in place, the kind of energy consumption that is happening over next 10 to 15 years.
But tell me, Rupesh, you were talking about the data center opportunity. There's EVs, there's green hydrogen. Which of these looks like the best investment thesis or investment case right now?
Yeah, definitely. If you look at the battery storage, which is currently at 1 gigawatt, and we are targeting close to 80 gigawatt kind of a battery storage. A data center, which is currently at not zero point 0.7 gigawatt, and target is close to 7 to 8 gigawatt in next 5, 6 years. The green hydrogen is there, but I think the companies with a completely backward integration with the solar cells modules, with a pump hydro storage, or you can have a solar and wind kind of things. I think all the conventional players have lined up investment toward these technologies, toward this the generation portfolio. I think the companies, because of strong operating cash flow, they can have a better capital allocation towards these segments. So green hydrogen, battery storage, all will have a massive capacity requirement on the renewable energy side. And that is why if you look at all the companies like JSW Energy, Torrent Power, CAC, you have NTPC, all are NLC tripling their capacity in the next 5 to 6 years, because they saw this kind of opportunities there, and they have strong operating cash flows to support this kind of capacity required.
With the valuations that NTPC is trading at right now, Rupesh?
See, if you look at the NTPC valuation from 2005 to 2010, when the peak deficit was close to 10-11%, and CRC regulatory framework was very favorable for the developers, and it was a high growth period 2003 to 2010. That time, NTPC were trading at close to 2.53x kind of a price to book value multiple. From 2010 to 2020, we have seen a multiple downgrade close to 1.2 to 1.5x. But now the next 10, 15 years, because of better capital allocation, better growth prospect, despite of slightly lower ROE as compared to 2003 to 2010, I think the company should trade at close to 2 times price to book value, or 2.5 times kind of a market cap to regulated equity. From that perspective, I think a value is still there in the NTPC. It's trading at close to 1.4 times price to book value, which is at the lower end of the historical valuation, when the next 7, 8 years is good for the entire industry and better capital allocation. So we'll still bet on NTPC at this valuation.
Rupesh, what do you make of this, of the US tariffs on India solar producers, and what's the impact of that? Because that's the latest news that has come through today. Give us a sense of what it does to some of the Indian players.
If you look at the solar exporters, I think Wari has exposure there. Earlier, Vikram and Premier also had some exposure, but in F26, the exposure was insignificant. But Wari has exposure. Now, the earlier was CVD, but now it's anti-dumping. So CVD has made a clause like solar cells should not come from these 3 countries. But now they have not mentioned solar cell. They mentioned modules. So modules is the final product. So if it is a anti-dumping and it's straight away 123%, then definitely negative for them. And secondly, if you look at the next 3, 4 years, the solar cell capacity will go from 25 gigawatt currently to close to more than 100 gigawatt. And most of these companies are eyeing for export market, because domestic tendering opportunity is not more than 50-55 gigawatt. As against our capacity available will be close to 200 gigawatt. So we are sitting with massive oversupply situation in the next 2 to 3 years. So export is an opportunity these companies are looking for. And from that perspective, I think US was a good export destination. But because of this duty structure and anti-dumping CVD, I think that export opportunity we might lose, and that might be slightly negative for the solar exporters for sure.
And lastly, Rupesh, give us your take with regard to the entire market coupling piece. Very tough to kind of let you go without getting a sense of what this means. there's a certain faction which seems to suggest that because IEX has such a large market share, it's very difficult to ignore IEX from the infrastructure. There's also a second set of people who believe that given that the growth will accelerate substantially, IEX will benefit regardless, even if market share comes off. I know you have a view here. Give us your take.
See, if market coupling is definitely coming, maybe from Jan 27 onwards, you might see a market coupling coming into picture. But I think if they want to maintain market share, IEX, then their exchange margin has to come down to 1.5. Otherwise, other exchanges are very active to no get more and more members in their on their board. So that is one key concern. Volumes will grow at 12-15%, but because margins is close to 85%, and that can be initially a big drag in terms of earning downgrades in the next 2 years. But after 29, I think market volume will start improving. But if like what happened in the other products, TAM market, where every exchanges has equal share of close to 35%. And this DAM and RTM is close to 70% of the overall volumes, where IEX command close to 98% market share. And any possibility of price discovery happening at the grid level, India level, I think there is no advantage for IEX. So market share loss is definitely there. And other exchanges, if go aggressive on the exchange margins, I think that will also have a significant hit on the IEX. So from that perspective, I think multiple derating will happen, and volume contraction as well as margin pressure is definitely there.
Okay. Rupesh, so good chatting with you today. Thank you so much for that insight on the entire energy sector.
Thank you.
Okay, that's the view coming in on the entire power and energy space by Rupesh Sankhe from Elara Capital. Still weak for the equity markets. IT continues to be a drag. And yeah, barring a few dots of green from within the broader markets, the breadth of the market as well is acutely under pressure. Metals as a sector are a lot more resilient, as is the case with cement, but the rest of the market continues to bleed. We'll continue tracking the equity market action after this very short break.